A number of economists say that the Reserve Bank has room to inject the economy with a rate cut this afternoon, with an expectation that the Monetary Policy Committee will trim the repo rate by 25 basis points. Now, this would take the repo rate to 7.25% and provide the economy with a breather. The view that the Reserve Bank has scope to move down with rates is informed by April's inflation numbers coming in at 2.8%, which is way below the central bank's inflation target midpoint of 4.5%. However, it's been confirmed that discussions are being held to bring down the inflation target to ensure the economy is more competitive with its trading partners. And while that's the case, economists don't believe this prospect will influence the SARB's position on rates at this time. Well, for more on this story, we're joined by Albert Botha, Head of Fixed Income at Ashburton Investments. Good afternoon and thank you for joining us. Do you think the rate will be cut by 25 basis points today, bringing the repo rate to 7.25%?
Good afternoon, everyone. Trying to forecast reserve banks is notoriously difficult. In my view, I think a rate cut is more likely than not. As you've mentioned earlier, we do have space in the local rate environment to cut rates. The situation faced by the SARB is meaningfully different than the situation that's being faced by the US Fed. Our inflation rate's below our target, is likely going to stay there. Theirs is above their target and is likely to go up. Our inflation rate didn't peak nearly as high as theirs. And in general, I think there is space for the Reserve Bank to cut. The question is effectively to which degree do they want to be conservative or not. But I think this time around, they certainly have the space required.
And then what about the MPC? How do you think they will balance stimulating growth with managing inflation risks, especially with headline inflation projected at 3.6%?
So the primary target of the Reserve Bank is still inflation targeting, but they have managed over the last couple of years, even decades, to quite well manage that target. Their secondary aim is also to look at growth risks. And at the moment, I think the space that they've created on the inflation side helps them a lot. We have inflation either below or within the target band or within the midpoint going out to the end of 2026. So for where they are now and for the requirements of the country and how high the real rate is at the moment, I think they will prioritize effectively lowering the rates rather than trying to keep inflation lower than it is already.
What about impact of US trade policies?
So the US trade policy is effectively very difficult to forecast. President Trump changes his announcement on these kinds of things versus all of his global partners on a sometimes daily and weekly basis. That includes South Africa, China, European Union, all of them. At the moment, the U.S. trade policies are a net negative to effectively global growth, and they are likely going to influence U.S. inflation. Trade policies on South Africa effectively slows down our growth, but is likely to have less of an impact on our local inflation picture.
And lastly, considering the rand's vulnerability to global factors like a stronger US dollar or commodity price shifts, what guidance might the MPC provide on exchange rates risks and their policy implications?
So this exchange rate stability is one of the only reasons, one of the biggest reasons that the SARB might keep the rates on hold. For where we are at the moment, we've seen meaningful dollar weakness versus all of its prior trading partners over the last couple of months. And many of the actions of the U.S. administration seems to favor a slightly weaker dollar. I don't think that there's a meaningful chance that exchange rate risk is going to be a primary determinant in keeping rates where they are. I think the exchange rate risk, at least for the moment, is muted and can further support a rate cut of 25 basis points at the moment.
Thank you so much, Albert Botha, Head of Fixed Income at Ashburton Investments, ahead of that MPC announcement later on today.